Hi, folks. Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. Thought we would come to you today with a brief market update, kind of let you know what's going on out there. The S&P 500 right at about 5640 as I'm speaking. That is down about 3.5% year to date and down about 8% from the peak, which was in late February. Obviously, we've had a sell-off since that time frame. And I would tell you that we just barely touched correction territory last week on Thursday. We basically got to the point where from peak to trough, if you look at, sort of closing price on Thursday afternoon, we were down 10.04%. The definition of a correction is off 10% from those recent peaks. So we just barely crossed that threshold. I would just note for everybody that corrections are normal. We have been talking about this for the last several market updates, but I would just tell people most years we have at least one, and we'll see how this one goes, how the market continues to play out. But we do expect these things. These are normal market movements. Bonds, meanwhile, behaving exactly as you'd think that bonds would behave as stocks start to sell off, as people get a little bit concerned about the economy. They are up about 1.75% for the year. 10-year Treasury yield right down around 4.3%, which is off, and we'll call it about 0.7% from the highs. So, bonds, that flight to safety asset acting exactly as you would think it would. Dominating the headlines this morning, retail sales coming in at plus 0.2% month over month. That's a little lighter on the headline number than people would like. I think the Dow Jones was calling for about 0.6% improvement. So a little bit lighter on the headline. But the core number, which strips out a bunch of, very noisy elements, was actually up 1% month over month. So showing that, for the bulls out there, showing that consumers are still willing to spend, showing that, after we saw the February number, which was actually a decline of about 1.6% month over month, showing sort of a reacceleration, which is giving the market a little bit of a tailwind today, a better than feared style number. I just remind everybody that, what the market is very concerned about right now is just overall level of consumer spending. If you think about consumer spending, it's driven really by two things. One is income, which is very clearly not a problem for most consumers. The unemployment rate still remains very, very low. Incomes are increasing. That's a very good thing as far as consumer spending goes. But then the other thing that feeds into consumer spending is consumer confidence. And this is where the market is a little spooked. A lot of survey data indicating that consumers are very worried, whether they're worried about tariffs or whether they're worried about inflation or whether they're worried about both of those things. Market really focused on whether or not those consumers will continue to choose to spend, despite the fact that on an income level they have the ability to spend. So today's report, at least, is a vote of confidence in the consumer, if you will, that they are willing to spend. Certainly we saw that in the month of February. Those numbers looked positive. Offsetting that in the marketplace continues to be this sort of policy uncertainty and rhetoric. Over the weekend, the Treasury Secretary commenting that the administration is not at all worried about the recent market pullback, that corrections are healthy and that pullbacks are healthy, which I think is a little bit concerning to Wall Street, as well as the sort of continuing back and forth narrative on tariffs and a little bit of uncertainty in what that future policy outlook is. As we talked about before, businesses and consumers don't really like uncertainty, and so some of that uncertainty playing through once again into that confidence number, which translates into spending. So with that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. I hope you're having a great day, and I hope to talk to you again soon.